So, welcome everybody to Enhancing the Accountant Bookkeeper Connection series featuring CATA Accounting. So there's myself. Oh, look at this. I have a new designation that I'm actually really excited about to add to this as well too. I just forgot to update it. It's my CFCC. So that is a cash flow canvas coach. I think that's what it stands for. Anyway, Carol's going through that as well too. So it's very, very exciting. And see me, talk to me about it when I'm out and about at the conferences, not here because we are running special ones at Sir Tanya Woods Richardson's, and she's doing it, and we're actually running special groups that are bookkeepers only. So Carol's part of the group right now, and Sandra is as well too. So there's 14 people in it, but it's absolutely amazing. There's 3 aha moments for cash flow, and it's wonderful, wonderful, wonderful. And I'm talking to CFIB right now, and BDC has already backed it. So this is going to take over and make our industry better. So anyway, but that's for another day. A little bit about myself. I'm not going to read through all of these. You guys can read if you want. End of the day is I've got lots of accolades and awards, and I will say honestly, it's extremely exhausting. However, because I, have the boot camp and whatnot, I unfortunately need to still stay relevant. Otherwise, I would love to be able to one day just fade back and not worry about any of all this stuff. But there it is. So, if you believe you can change, if you make it a habit, the change becomes real. So that's a quote from Charles Duhigg, I think is how it's pronounced. And this webinar does qualify for CPD credits through CPB Canada. There will be 2 polls that both must be answered in order to qualify, and a recording of the webinar and your CPD credits will be emailed within 7 days. If you don't get it, you've probably taken yourself off of my mailing list or it's in your spam. So check your spam first. If you've taken yourself off, the only way is you'll have to go to my site, bookkeepersbootcamp.ca, click resubscribe, enter your email address, check your spam too, and then email me once you've resubscribed because I use Flowdesk and it follows all of the CASA laws. Once you've resubscribed, and then I can send you the link with your CPD and recording. And then don't unsubscribe again unless you really don't want to hear from us again, or you're going to have to repeat this all the time. Okay, and so we have from CAD Accounting Solutions, we have Jonathan Carter, who's the founder and principal accountant. He is my friend, my accountant, and the top accountant that we refer to. We do like to give multiple names to people just so that they feel that they have a choice. But I always, preface with, you know what? Jonathan is my accountant, he is my friend, and he is the one that I trust, so I highly recommend that you call him first. And what we love is that Jonathan and his team, they work in QBO. They know the little nuances, such as don't just give us a journal entry or put in a journal entry that is just to accounts payable or accounts receivable. We need to have a client. So they know those things like that. And they actually do the journal entries themselves, which is great. They have attention to detail and, of course, outstanding customer service. So I am going to stop sharing, let Jonathan take over. Oh, there looks like
Okay,
there's a bunch of people
that up a
just
little
joining.
bit. I think I did this right. Everybody should see the title page.
Yep.
All right. So I hope this is a review for everybody, and there's nothing really new about this, except for maybe some ideas and some stimulating discussion as we proceed. Um, this was not a planned topic, but it was something that's come up several times so far in this corporate tax season. And doing my own quarterly management statement review, I was accidentally sent something that really triggered some ideas. And I think this is going to be a good one. I hope it's a good one, and I hope it's not too rudimentary. Anyway, I think everybody knows me. You know, I'm not going to get into all this stuff. The one thing that's missing is the 2025 top 50. We're going to update that our template shortly. And yeah, I do like working with internet-based businesses, people who are comfortable with technology. And I really like working with bookkeeping firms and the clients of bookkeeping firms, particularly CPB bookkeeping firms, because we know we're going to get a higher quality of file to work with. So, all right. So just today's agenda, very, very basic stuff. the accounting equation, accrual versus cash basis, and then the balance sheet, income statement, indirect cash flow statement. I just like that one better than the direct, but I'll talk about that a little bit as well. And then how we can customize things to get information, to present information in a more meaningful way for management. And I'm very, very interested in getting into the questions and discussion when we get to that. So, poll question number one: which of the following should be a cost of sales? A, Amazon FBA fees for an e commerce business. B, the owner's salary. C, employee benefits for factory workers. D, interest paid. Or E, A and C. And we have the old, oh no, this is poll two, is it?
That's the wrong.
Oh, that's the wrong one. Sorry. I had to stop sharing and then reshare right away to be able to let the panelists vote. So hang on, bear with me. Launch and poll, allow panelists to vote, relaunch.
Yay.
There we go. Okay. And the funny thing is, when I was looking this up, and so Carol and Shannon, I'm gonna and Sandra, you guys should get the right answer on this because we just talked about this yesterday on our cash flow canvas certified trading.
I know. I just thought of that. And then I already did my answer. And then I went, I bet you this is a trick question and I got it wrong. Damn it.
Okay, so we've got we'll do a countdown because we've got 14 out of 16. Now 15 now, and it could be myself because myself and Jonathan, we actually don't get CPD for this because we're running it. But okay, so 5, 4, 3, 2, 1. End poll. And share results.
All right. Yeah. The answer is A and C.
Damn it.
Mhm.
The reason I included C is because if you did not have the factory operating, you did not have that labor, you would not have that expense. But it
Yeah,
looks
and
like everyone pretty much was on Amazon.
And what we've covered in like the cash flow canvas, and that's kind of part of helping the client's budget to realize to make sure they're pricing properly, is they have to include that. So we've got like an indirect cost A, or sorry, direct cost A, which would be the Amazon fees, and direct cost B would be that yes, what is the time, the cost of the people and the labor to go into creating it. So
Yeah.
yeah,
And that's all on top of course, the actual cost of goods sold.
yeah.
Right. So yeah, that's we'll get into it more as we go. So this came up over this past tax season. I was presented an unbalanced balance sheet. So just a quick reminder. Yeah, I see Karen's reaction. It's the fundamental accounting equation, right? Assets minus liabilities equals owner's equity, or assets equals owner's equity, or liabilities plus owner's equity.
Well, how do you
Um,
do that even?
it happened. It's you know what? Everybody makes mistakes, right?
Can I
It's
also let me also add in, I have seen where QuickBooks has made an error. They've
yeah.
not made an error on mine, but there was one time on Sherry's because Sherry called me and she's like, am I going insane? It was on the trial balance. It was, in there. There was a balance to it, but it was not on the balance sheet. Or maybe it was the other way around. It was on the balance sheet and not the trial balance. So she actually did go to support and she's got a copy of the conversation that I still laugh at. She shares it to me every now and then. That so all of you know Shirley Mather, she's been doing this a long time, like lots of us, and she actually got QBO support responding to her, telling her that maybe she should reach out to her accountant and have her accountant teach her how to read the trial balance and balance sheet, but it actually there was a glitch in the back end that was not pulling everything with the balance through to it. So double check because software can muck up, and especially the more AI that comes in, the more there is to mess up, right? Like think about our old-fashioned cars with carburetors and all this stuff. how long did it take to figure out, to troubleshoot on it versus today with all of these computer automated parts, right? So things can still muck up. So I have started double checking the balances before I upload them to the accountant, just in case. And knock on wood, I've not found an error, but I'm not going to stop double checking because I've seen it with my own eyes.
I've seen it once on the balance sheet from QuickBooks Online where there was an issue with FX and it was it was $1.19 off. And it was an actual bug that they had to fix, but the assets were slightly lower than the liabilities by like this $1.19. And they did eventually fix it, but it took a long time. The reason I also put the opening retained earnings plus net income equals closing retained earnings equation there is sometimes this can create a little bit of confusion. Say you're starting with a new client and you're inputting the numbers from Schedule 100 of a corporate tax return. There could be other items affecting retained earnings, and different accountants do it different ways, right? So you could have something like our firm, we put non-deductibles in other items affecting retained earnings. So that means the Schedule 125, the profit and loss, doesn't match to the profit and loss in the bookkeeping system because we've taken away those penalties and interest and put them on the balance sheet. Another issue that I've seen with unbalanced stuff coming out of the QuickBooks ecosystem is through workpaper when there is an unrealized gain or loss. Sometimes, like you have to go and you have to figure out why is this not balancing. Then, of course, you get the experience and you can figure it out. But that's another thing that we would throw into other items affecting retained earnings. So this equation, though it is true, does not always appear 100% that way when you're looking at a corporate tax return, depending on who's doing it. So I'm just going to move on because I think everybody knows that. I did want to touch on cash basis versus accrual basis because we have seen a few things come in on a cash basis over the past our current corporate tax season. Just remember, cash basis is when cash moves. So this means if somebody sits on an invoice or says, you know what, I'm just, I got this money from the client, but I'm just going to hold on to it until next quarter so my HST isn't as high. There can be manipulation there.
Yeah.
There's very few situations where
I have
cash based.
a question on that now that this comes up. And it was on a
Sure.
post that I saw where someone was looking for information. Apparently it was for a therapy, whatever, and they were using the Jane system. And the lady was adamant that they do cash right up until year end and then they just accrual what's still outstanding on the accounts receivable. And I'm thinking that's still wrong. Because for exactly how you said that. You can hold on to invoices and make those numbers skewed by not entering them when they're actually accrued.
So
Yeah.
we actually have people that use Jane, and I just want to add to that very briefly. My opinion to this is that legally there's nothing wrong with it because the books don't have to be that until the taxes. So, and Jonathan, please correct me if I'm wrong, but I think that there's that. However, they can't do anything with that information. What happens if they need to go for proper loans? There's so many other reasons of
Well,
planning
just
reasons. So
GST.
personally, I
Yeah,
either call that uneducated bookkeeping or lazy bookkeeping.
yeah.
If anybody does that, I'm very sorry. That is my opinion of it. I'm not saying I didn't used to do it once before I knew better, but I've not done that in a long, long time.
No,
So
exactly.
I don't have a lot of experience with Jane, but I do have one client that has Jane, and I do it based on because there's two columns. There's the actual invoiced and then the what's been collected. And I know the AR is it can be it can be challenging, but I always just take the column that says what it's been billed on the date it's been billed. And at the end of the year, we might review and write off something if it has still sitting in AR after a certain period of time.
Yeah, so if it's billed, it's still being recognized when it was
Yeah.
billed, and then so that's what we do again, and then we add in the AR, right? Like we make sure that we balance that out.
I've seen
That we-
similar from Harvest as well, where you have the sales report and it shows all the invoices for the year and then those that have been paid. And the biggest problem that I find with that is when you look at the other side, the expense report, it does not show any expenses that have not been paid, right? So it's not accrual basis. Back in the day of my early involvement in the accounting industry, I used to work at this, we'll call it a factory. It was a metal reclamation center. And yeah, this would be common that somebody would sit on a bill to make their quarter look better so that they would get a bonus, and then they drop it on AP desk like the next day after the reporting went in. And of course, then you have prior period adjustments. And back then it was a custom built Unix system or Linux system. It was a nightmare for those prior period adjustments. So the CA in charge would just put them in the current period when you got the bill. And that, of course, if CRA reviews can get into trouble. We did have a client who insisted on doing their own HST returns for a few years. He was doing them on a cash basis. He got caught. It cost him $14,000 plus our fees for the review because it was not something that was covered because we weren't doing it. And in the end, he's like, "Okay, yeah, I can see why you insisted on wanting to do the HST. We'll just hand it over to you."
Yeah, and CRA review, you're absolutely right. If things don't match up, they're going to make you go back and redo them. If they don't match up, they're going to say, "No, this doesn't match. You don't have a bill, with this date on it because you need to show all of that." So they'll send you back and make you redo them. So, yes.
And then where was I going to go? There was something else I was going to say about that. The Jane scenario that you're talking about, accruing everything at the end of the year. Well, that's all fine and dandy, but then if you're filing HST more than once a year, all of those HST returns are going to be wrong. Right? So I think I'm preaching to the choir here. Accrual basis over cash basis. There are very few instances where cash basis is actually okay. So another thing that I've seen a lot of was current versus long term. And I mean, in general, we're looking at it once a year, right? From a tax perspective. So if there's a loan that's repayable over 5 years, we expect to see 1 year's worth of principal in current and the balance in long term. What we commonly see is everything either in long term or in current. And if you want to be really precise about it, every month that current balance should be changing, right? Because that current balance, not only did something get paid, that next payment from 12 months down the road should be moving from long-term to current if you want to get really granular about it. But in general, like just understanding the difference between the current and the long-term. And we've seen this, and I think it's kind of, and I'd love a little feedback on this with prepaid rent, that first month's deposit. It's never short-term. It's never current. But that's where QuickBooks kind of puts it when you're using that account. So fixed assets versus expenses, the threshold $500 or more, depending on the company's policies. Larger company, they might have a fixed asset limit of $1,000 or $10,000. A company that really wants to show more assets might drop it to like 250 or something like that. But generally, CRA looks at that $500 threshold per item. So if you buy 10 chairs for $1,000, that can be an expense versus a fixed item, which generally is more tax advantageous to the client. And of course, the accrual accounts, we do expect to see accrual-based bookkeeping. If there's amounts outstanding, I expect to see, accounts receivable. If there's bills that are unpaid, I expect to see accounts payable, things like that. So I wanted to talk about grouping a little, because this is something that's been very useful for translating from QBO to compiled and even audited financial statements. We don't do audit. We are not licensed to do audit, but the auditors have liked the way that we're doing this. So I just wanted to share it. So for instance, we have a company that has essentially three major groups of fixed assets. Its intellectual property is the one that is worth everything. They also have a factory, a building under construction is not yet being depreciated because not opened. It's scheduled to open in a couple months. Finally, yay. And then they have those other little things, computer equipment, furniture, lab equipment, things like that, right? So by grouping those things together, the auditors are finding it easier to validate and to like kind of put their stamp of approval on things and move on. and easier to translate that into presenting the audited financial statements, easier to present the schedules and the notes, things along those lines. You could do the similar on the liability side, group your loans together. You could group convertible loans together. If there's something that could convert into equity, that could be very important. A lot of that side of the balance sheet ideas came out of our recent, we did an IFRS conversion this year, and that's where that came from. Because in IFRS, sometimes depending on the nature of that loan, if it's a convertible loan, it might not be classified as a loan. It might be classified as equity, which is kind of out there. But anyway, I just wanted to say groupings can add a lot of value for understanding where the assets and the liabilities are for the management. And when you're looking at the statements, if you got a chart of accounts the length of your arm, you can shrink it down. And if you have things grouped, it can make it really easy, make nice, clean management reports, things like that. So on to the thing that managers pay attention to. This is all they ever really look at, really. The income statement, profit and loss. So we came across this kind of with our internal team, some of these terminologies, and I wanted to just talk about them before. This is the way I learned it. Other people may have learned it differently, and I'd love some discussion about that. When I was reviewing my own quarterly detailed profit and loss statement, we've definitely found things that were below the line that should be above the line, and vice versa. It was an interesting exercise. It was not what was intended. It was by error, but we're going to add that because it can identify things such as double counting an expense going in the wrong category, or a category being in the wrong place. So when I say top line, I mean your top line regular revenue. So if you're getting, say, a grant, I would not consider that part of your top line. But your regular, say, tax services, bookkeeping services, those would be top line. Above the line are all the things that go into generating that regular revenue, where the more revenue you'd have, the higher expense you'd have. So we talked about FBA fees, direct salaries. In our case, we do it for all the QuickBooks subscriptions, the WagePoint subscriptions, except for the firms, which of course means that you have to do a little adjustment off of that monthly invoice. But really to try and get a better understanding of how are we generating our gross profit, and then how is that gross profit being used to pay our overhead expenses. Gross profit is probably one of the most important, I think it's the most important line on the income statement, because if it's too thin, you don't have a viable business. And if it's huge, well, first of all, I'd want to make sure that all your costs of sales are being counted for correctly. And you could have a very, very attractive business. So we did have an e-commerce client many years ago whose gross profit was in excess of 80% most of the time. They were selling information products. They were hugely profitable. They ended up selling, but they had a really good understanding of the fact that if we sell more, we'll make more. I was working with a smaller, I'm just going to use air quotes, e-commerce company, and they were planning on going on Amazon. And after looking at their gross profit, it's like, if you go on to Amazon, it's going to cost you. Like literally, it's going to cost you, because their fees are going to make your gross profit on the items sold, they're negative. So you have to be strategic about what you're going to sell on that platform, and you need to have enough margin to absorb it and still contribute to your overhead expenses.
Well, can I just pop in here for a second too? That the gross
Absolutely.
profit, this is again that I'm learning through the cash flow canvas, that is actually where it's those direct costs B, we call them, that are not, they don't consider a direct cost or whatever. That's where most money is lost, because they're not pricing it properly, because they're not taking that into account. And if all of the businesses in Canada, small business, large corporations, every Canadian business were to actually increase our gross profit by 1%, there would be enough additional revenue generated from, taxes from the business, the personal side, dividends, employees, everything. When we look at the whole picture, to actually pay off our national debt 1 year, 1%. That's a heck of a lot. So if we help clients do that, we're actually helping our deficit as well. So
That's an interesting idea. I've never heard that. Now I want to know the stats to back it up.
Tanya Woods Richardson, we're gonna talk. We're gonna talk. I know you've already taken some stuff with her, but we're gonna talk, Jonathan.
I'm a big fan of hers, yeah. So below the line are the overhead expenses. Those are the things you would normally have no matter what. If you weren't selling anything, you're still going to have your overhead expenses. This can have a meaningful impact if you can find areas to reduce and below the line. They can have a meaningful impact to your bottom line, your net income after all expenses. Other income, that's income that's not part of normal business operations. Like I said, the grants, Canada Carbon Rebate, make sure those Canada Carbon Rebates are in a separate category. There is no tax on tax. So that is not a taxable item. Again, that's something we're going to throw in other items affecting retained earnings. So, and then other expenses are not a normal part of business operations. I'm going to expand on this a little bit because I do play with this area a little bit where there are things I put in there, depending on the business, that are a normal part of business operations, but they're there intentionally for a reason. We'll get into that. But some common things might be um, your grant, or sorry, your penalties and interest, parking tickets, some kind of other thing that's not normal for your situation, a legal settlement, things like that. So knowing the clients and what they need to see can really allow you to set up the architecture behind the accounting system to really help them manage their business. One thing that I like doing is the recurring journal entries or just using the copy feature and then updating numbers in journal entries that have to go in on a regular. So say for instance, you're working with a payroll platform that just puts everything into one payroll line, but you want to separate out, okay, these are my admin salaries, these are my management salaries, these are my client service salaries. Well, you're gonna have to do a general journal entry to make that go if the software won't do it for you. A lot of the software now can do that, so that's really nice. But let's say you have to do that, and it's going to be a little bit different every month, right? So you're going to have to recreate those journal entries every period. It's not always going to be the same as people get added, people get raises, things like that. But that's an example. Another example I commonly see is, and this is how we train our team, is if somebody pays lump sum for insurance, like our firm does, we pay one annual fee, then that goes straight into prepaid expense. And then immediately the recurring journal entry is set up for the next 11 months to come out, usually because that first month you have to manually do. You can't set up the recurring journal entry backwards, right? So yeah, do people use these terms or is this just me? Oh, I'm seeing some nods. Okay, all right, cool. We're on the same page. And then I wanted to talk about the cash flow statement. This is not often enough reviewed. I prefer the indirect method. The direct method can be summarized very, very easily. Payments in, where'd they come from? So payments from customers, payments from grants, payments from, I don't know, set legal settlements. Money out, payments to vendors, payments to labor, payments to ownership. It's just it doesn't give a lot of insight. The indirect method really cuts things into where is the money going from an operational or from a entire business standpoint. So we know why as well as where. So for instance, all right, so the indirect, you start with net income, you subtract your non-cash expenses like depreciation, amortization, and then you add or subtract the changes in balance sheet accounts related to the categories of operations, financing, and investment. So let's say the sales were great, but the AR went up $10,000. Well, that's a $10,000 use of cash because now you're financing that customer's AR. Let's say your AP went up $10,000. Well, that's adding $10,000 to your bottom line or to your cash flow because you're using that vendor to finance your expenses. This can be really useful for showing particularly customers who like to use things as as a piggy bank, use their business as a piggy bank, that the impact their shareholder draws are having on the business's cash flow. It can also show, help reconcile with where is my cash versus my profit. And this is the reconciliation between the two. I think this is one of the most useful and the most underused, and I'm very glad that QuickBooks now produces it and does a decent job of it. All right, into customizing for management. So I'm hoping to have a little discussion here. Depending what's important to the management of the business, accounts can be grouped, relocated, allocated, or otherwise presented in a way to make it easier for management to understand what's happening with the business and make better decisions. So let's have a chat here. What would these types of clients need to understand? Let's start with a landscaping business. I'm gonna no real comments. Okay, I'm gonna hop in with landscaping and construction. One thing we encourage is for them to understand how profitable their customers are. So
Oh,
as a result, what do you need? You need a good gross, you need to understand your gross margin well. There's also ways beyond the chart of accounts we can use to customize to get that information on a more granular level. And I'll talk about that more in another slide. An e-commerce business, I think something that's vital is to understand your cost structure for each platform. So if you're on Wayfair, if you're on Amazon, and you're on eBay, you need to know how profitable each one of those channels is. And that can be a really tricky calculation to do because some of those platforms use more labor than others. So that reallocation can be challenging, right? Like, for instance, eBay tends to be a transactional level. You're not bulk selling on eBay. So you're going to spend more time working on selling on something on eBay than you would on Amazon. But eBay fees are probably going to be less than what you pay on Amazon. So these kind of things can help people model and understand whether it's profitable to be on a platform or not. All right, now this one, the next one, accounting or bookkeeping firm, I insist somebody must have some input here.
By customer.
Yeah, that's what I was going to say.
By customer.
Yeah.
So that's actually where I was going with the construction, the landscaping businesses, using
Yeah.
that customer name on the related expense. If you have the time and the wherewithal and the knowledge to allocate your labor per customer, that could be really, really, really impactful. And help your team understand how they're doing for their specific customers. So that's a good one. Any other thoughts?
My thought, Jonathan, you wouldn't like, and when you said I'm gonna insist that somebody input here, I was like, you can go ahead and insist all you want. We're gonna stay stubborn and not say anything.
I like to
Um,
look at per revenue stream as well.
yes.
Yeah.
So we use the
And-
cost system. It's
I think
another
we should
great way.
I think we should be doing that for every customer that
Yeah.
has differing revenue streams.
Yeah,
to
we're
be
per
honest. It's easy
customer,
enough to do with classes.
per customer, per revenue stream, per niche.
Exactly. Yeah, exactly.
Yeah.
Yeah.
And
That's exactly what we do. Sorry.
that's okay. And programs used too. We take like our QuickBooks bill and all of those and break it down for each customer. But if I pull up a profit and loss for XYZ, I have how much we spent on each one.
Yeah, I think that's fantastic. We're not there. We'd like to get there, but we're not there. We look at things on more revenue stream. So essentially, we have tax, we have bookkeeping, we have consulting. That's the three legs that we're building at Kata. So that's how we look at it. And then we do some more granular work to look at how things are going for regular bookkeeping clients after the fact. And we do the same for like corporate tax clients, but it's not a great process yet. It's a summer project, that's for sure. All right.
We're doing a cash flow, or I'm doing a cash flow forecast for a customer who has multiple revenue streams, but also multiple payment breaks too. Anything out of the US tends to be about 60 days. So
Interesting.
having it grouped very, very tightly in QBO means that I can then bring in the extra data and show her exactly when her cash is expected to arrive.
Yeah,
So
that's
yeah,
very
we get
powerful,
real
Chris.
granular.
Yeah, that's
Yeah.
awesome. That's awesome. All right. Just going to move on because I think we could have some great discussion here. Gross profit, we've talked about a lot, the basic understandings of what types of costs there are, the variable costs that go up or down depending on the level of activity of the business, what they're selling, how much they're selling, and so on. The fixed costs that you're always going to pay, even if you never make a sale. And then the sunk costs. Okay, we spent money on this software. The rollout didn't work out very well. You're never going to claw it back. Too bad, so sad, move on, right? You got to do that. That's one of the things to be cautious about if a client ever asks your advice about buying a fixed asset and or a long-term contract commitment. Speaking with a company, well, somebody from a company the other day about how their customer was demanding a new kind of product. So they were like, yeah, we can do that. And they went and they invested in the engineering. They started manufacturing the product, started selling the product, but the product really didn't sell to anyone but that one customer. It seemed like a logical leap, but there was no market research done. There was no additional marketing done, and so on. Now they're in the situation where it's like, okay, we're producing this product on the regular. How do we sell more of it? And that's the way they're going. And now they're looking at more strategic rollouts of new products instead of, well, the customer's asking for this. When I first started out, I wanted to do whatever I could, and I would try whatever, and it was an absolute mistake. Absolutely terrible mistake. Stick to your lane, know what you're good at, and do what you're good at. So where's my cursor? Okay, so groupings, we've talked about groupings like revenue, grouping like costs of sales, like Amazon, for instance, grouping like expenses. So with our construction clients, we work with the construction consultant, Brian Kaplan. I think he's been on one of these webinars before. And essentially, we have things grouped into larger categories. And when they're looking at things, they're shrinking it. They're not looking at the individual components of those categories. They're just looking at the total of those categories. So those groupings are very helpful. It's also very helpful that they use standardized chart of accounts. When moving from books to tax, categories are grouped by Giphy code. So there are some times where it's very important to split stuff out. So for instance, depreciation of tangible assets versus intangible assets have different Giphy codes. It's always better to have those individually recognized rather than have them all in just depreciation. That way it makes our job easier. There are a lot of accountants who just be like, whatever, just throw the numbers in the tax return and move on. But from our perspective, if we do see that, we're going to want to separate out the intangible versus the tangible depreciation. I did see Lynn had your hand up.
Yeah, I was hung up on the e-commerce fees. Like I've got a client that does some online sales, so they've got a separate report for that. They're restaurants, so they have skip the dishes. There's fees for that. There's fees. So I've got all these different little e-commerce fees. So would you classify those as COGS?
Definitely.
Okay.
Definitely. And I would either use the class system or chart of accounts to outline what platform they relate to. So we
Well, I'm
work
ahead
with
of you there.
pardon?
I'm ahead of you there.
We worked with a bubble tea shop that had their schedule opening on April 1st of 2020. So you can all imagine how well that went.
Yeah.
And they really relied at the beginning on things like Skip, Uber Eats, things like
Yeah.
that. And they, we had them track the costs and the thing and the sales that were being generated so they
Mhm.
could understand the margin they were getting from those different platforms. And as a result, they narrowed and expanded. So they dropped a couple and then they added another that was very popular with the Asian community in that neighborhood.
Mhm.
And as a result, they lost less money than they would have otherwise lost had they not gone that route in the middle of the lockdowns.
Yeah. I just never associated with cost of goods sold before, and I thought, oh, That could change the
Well,
whole picture here.
here's a classic example. If
Yeah.
anybody's collecting payments with QuickBooks Payments, that should be a COGS
Mhm.
for sure. For sure.
Okay, thank you.
Yeah, no worries. So
QuickBooks
just
payments, I just have it sitting as an expense.
Yeah.
yeah.
So, yeah.
That's how QuickBooks sets it up. It's a little difficult to get it to behave correctly.
Yeah. So okay, so just some examples. We talked about the sales channels with e-commerce companies. We talked about grouping for construction companies. And I've heard customers mentioned, I love being able to do that, to pull a P&L and say, here's how you did with this customer. The one thing that I find really difficult for the construction companies is if we're not getting the data about where the employee is spending their time, we
Yeah.
can't allocate that time to that job. Now, the nice part is some of our smaller guys, well, they're only working one job at a time. So they know that between this date and this date, all of it applies to that customer, and we can do some things like that. But of course, you can get really granular when you're peeling back the different amounts of payroll and where they were and things like that. Suppliers is another one, and getting your suppliers nice and clean. I know we've had a lot of luck with that deep dive diagnostic review Tanya taught through the Bookkeepers Bootcamp, and that's really helped us be a little bit more on top of that. And it can help us understand it, where our money is going, and if do we have any potential negotiating power there. Like none of us are going to end up negotiating with QuickBooks for better fees or better subscription rates. But if we are, say, spending a lot of money with a specific, I don't know, offshoring firm, there might be some negotiating power there. So it's something to keep an eye on. Yeah, locations, very important. Classes, I love doing that. What I hate seeing is, and I've seen this many times, where you have a revenue line item per customer. And so the person has like 60 lines of revenue and zero COGS. Those are usually DIY books, but that's some of the things that we've seen. Anyway, does anybody else have anything to share about how they're using any of these features to help get insight into the business?
I understand that tags are kind of going away. There seems to be a sort of a gray area there, but they do have custom fields that I want to explore for one of our bigger clients.
We've
biggest-
started doing that internally to understand our how our sales are doing with our 3 levels of personal tax service and our 3 levels of bookkeeping service. So we've started doing that, but yeah, tags we never really got into, but I know tags exist in other software. So there could still be, tags that could be used in another platform. I'm failing to think of one right now.
So I just want to clarify, Matt. Sherry says tags are staying apparently. Yes and no. Tags are staying if they're already being used on the file. Currently, they're not taking them away. They are not going to allow them on any new files. So if you go to get a new one, you can't use them. It's only on the existing clients that you've got the tags on. Now, with that, I also expect that they're just going to keep it a short time, and within the next year, we're going to see them gone. So my recommendation is to find another way, because that is what Intuit, predictive analytics. We look at what they've done in the past, and what they've done in the past is they've appeased us temporarily and then waited and then got rid of them completely down the road. So
Yeah.
yeah.
I don't think classes, locations, customers, and suppliers are going anywhere. And you can
No,
get a
no,
lot
not
of
there.
it.
Just the
No,
tags. Just the
the
tags.
Yeah, you can get a
Classes
lot
and
of it.
cost centers are standard accounting practice anyway.
Absolutely.
Yeah.
Absolutely.
And
All
for
right.
depending on the client, I use project allocation to give us the net profitability on a particular job that they have. So where they have bigger jobs, we can say how much we make and how much all the little ancillary costs were, including payroll, and then they know the net profitability of the job.
That's exactly. It's like job costing light almost, right? Like
Yep.
you're not getting super granular on it, but you're getting them a good idea of, okay, this job you made this much money, well done.
Yeah.
Kind of idea.
Well, and because they have nothing right now, and I'm introducing this and saying, well, you don't know what you're making, you might not be making enough on the job. You might not be profitable. So we have to know that
Okay.
before we can say that the pricing's off.
That is huge value. And it might not be the pricing. It might be like, don't take this type of customer.
Well,
Yeah.
one thing that I came across with one of actually the bookkeepers that I coach, her and I sat down and we went through it, and it took me 3 times, and I've known her for a long time, so I could get, I could change my verbiage to get a little bit more blunt. But when we worked it out, we were going through, and she kept saying to me, "I need to keep these low clients to be able to keep my people going." So we started digging into them, and it turns out she was not even breaking even. And I kept saying that to her. She says, "No, no, no, I need them." So I said, "Look," I said, "look at it this way." I said, "I want you to stop sending them a bill and you send them a check for $50 because that's what it's costing you." And I had to actually flip the wording like that for her to go, "Oh my gosh, you're right," because she just had it in her head. And again, she's a bookkeeper. She's been doing this a long time, but she just had it in her head that she was at least breaking even, and that was helping to keep these people afloat. And I'm like, "Nope, you cut this person a check for $50 and you cut this person a check for $125." And it just, so sometimes you do have to, obviously read the room, but sometimes you do have to get a little blunt and really point things out because people like just to help with that costing, right?
Yeah.
One of my challenges is that, and if anybody can give me any insights here, it'd be very helpful, how to phrase it, how to present to them. We have a ton of clients who really want to know, how they're making money by project, by revenue stream, by however, by class. And we say, yes, we can definitely do that for the revenue, but can you tell me where you're spending your money? Can you identify the class on your receipts? Can you identify the customer on your purchase orders and receipts? Trying to get it consistent is just unbelievably difficult. And I just don't have the words for them. I don't know quite how to say, you can't get that without this.
Yeah,
Lead a horse to water,
absolutely.
can't make him drink. I would just say, "I'd
You
love to
got
help
it.
you, but this is what you need to do in order to get those numbers. And if you don't do those, you're not going to get those numbers." Bottom line.
Been doing it for years. One of them still hasn't figured out, no, you can't send this to Dex. Yes, you can send that to Dex. She's learning, but yeah, they just don't get it. I want to
Mm-hmm.
see what that customer cost me. Okay, great. Can you tell me what you spent for that customer?
We find the labor component is the most challenging.
Do you? I'm the labor is fairly easy for us because we get the reports that allow us to split it up. But
Sorry,
um,
I think the labor is the most challenging because we're not getting that information.
are you not?
Mm.
Well, we do in most instances, but the one where we don't get it is when they're firing stuff into decks. They're very, very random. I'm talking designers mostly. They're very, very random. They're living in a flurry of paper, and then you have to try and sort it out and figure out which customer is which. Can't do it.
Yeah.
And they keep saying, well, I want it by customer. Okay, give me the information by customer.
How about
I
just
can't
send
get
them
it through.
How about send them a report? We send clients a report. Here's who you've not inputted, like here's who you've not provided any receipts for. So why not set up a class, a new customer class, and just send them that report and say, "These are not allocated to class because we didn't get the information we need. If you want us to do that, you can send it to us. Now we're going to charge you extra for touching it twice." But so then that way they can see, "Oh my gosh, I'm missing out on all of
Yeah,
these
I've been there,
direct
done
costs."
that, never get the report back with new information, unfortunately. So,
It's interesting when they're reporting to somebody else. Suddenly, it becomes very important. So, I mean, maybe not in the construction industry, but in the daycare with all the funding, I mean, they have to be audited.
mm,
So now you need your books in much better shape. We have a startup who's doing an RTO to go public. That's going to be a massive, they have to have we did the IFRS conversion. They're going to have to get audited annually, file their quarterly reports. They need their numbers right. So the good thing is that team's really on board, and I love the fact that the inventory is all managed by scientists, so it's like super accurate. All right. I'm going to get through these last slides just so we can get to our poll question in before 1 p.m. The most common problem we see with the income statements, we've talked about this a lot, is cost of sales being below the line. So you're overestimating what your gross profit, your gross margin is. We've talked about this. I'm not going to beat this up. One thing I did notice going through that exercise this past month was that detailed review of the income statement can provide some insight and like, oh, you know what? We're putting that there. We really should put it over here. Or, hey, you know what? This whole category is really should be related to this, not to that, or things like that. And that we find helpful. One thing I would like us to get better at is our annual subscriptions and treating them as prepaid. So we don't have a lot of them. And another thing that's come out of this is finding areas to cut. So in July, we're actually dropping Zoom. We're dropping Zoom Phone. We're dropping Zoom. We're going 100% Google. And we're going to have Google Voice for everybody because it's already like we're already paying for Google Meet as part of our thing. It's not quite as good as Zoom, but it's pretty darn good. And that's the way we're going to go with it. Excuse me 1 second.
I haven't had a paid Zoom account for a few years. I'm 100% Microsoft, so I use Teams for everything. I haven't paid for Zoom for a few years now.
Yeah, back in the day, I was actually on Skype before Zoom.
Yeah.
And yeah, I saw the laughter there. But yeah, we found it was better to be on Zoom than on Skype because it's just less resource
Teams
intense.
just isn't good
And
enough.
Google Meet stank back then. Sorry?
Oh, and say Teams is just not good. I pay for Teams in my Microsoft 365 for business, but I don't like it, so I pay for Zoom.
Okay. Teach their own, but there are opportunities.
Yeah.
The whole point is that that detailed review can produce insight and positive change. I'm not even going to go through this example because we've essentially talked about it. Just essentially saying, you really need to understand your margin if you're going to go to another platform. This is what I want to talk about with the other expenses. So I have done this for a few startup clients where I put the interest, the tax, the depreciation, the amortization as part of other expenses so that they can see their EBITDA really easily. Doesn't truly belong there. We often put tax in other expenses. Again, doesn't really belong there, but it does allow them to see their EBITDA a lot easier. So, you know, normally these things would be below the line with overhead expenses. Arguments can be made that putting them in other expenses is inappropriate. I agree, but sometimes it's just helpful for management to understand. And of course, having a good chart of accounts, having good structure in place makes budgeting easier and better and more accurate, right? It generally focuses on the income statement, but if you're doing something comprehensive, like a big project, say for a startup over a 5-year plan, you want to include that capital budget because you're going to have to pay for those big machines and those factory lines and things like that. And you're going to want to help them understand their cash flow and when their runway is going to run out. But these kind of things can be really important to helping them make the right decision when it comes to things like pricing or evaluating a product or sales channel. Buy versus lease. I had this conversation with a YouTube creator, wanted to go out and drop 175K US on a McLaren. And I was like, don't be an idiot. You're only going to get to write off a certain portion of that. And, the CRA is going to be all over you for that. You got to keep a mileage log. I know you're not going to keep a mileage log. It's going to be a headache. I need it for my content creation to show lifestyle, success, and whatnot. It's like, so go rent cars. You can join a club out near the Toronto airport where you can pay a nominal fee to drive a Lamborghini versus a McLaren versus a Ferrari. And you can just go haywire with that. And since you're renting it only for specific shoots, it's directly a cost of goods sold. It's very easy to tie that together and to not have that personal use component come into it. And another one, this does get a bit more complicated than just looking at a budget, but debt versus equity financing. Debt versus equity financing, debt, it's always better to spend other people's money. Debt financing is most of the time is the best way to go, but there can be times where you want to do a quantitative and qualitative analysis to determine if you're going to go with debt or equity financing. All right, just some other ways. I've learned actually a lot of these through people, through Tanya, through people at these bookkeepers boot camp, and through this webinar. The meal and entertainment tax code, we've been on that since forever. The no receipt tax code, that's another great one. Get an easy report out to the client. Be like, here's what it is. We do our firm, we do out of scope, no receipt if we don't know. If it's something that's pretty consistent, but there's no receipt, we will do HST no receipt as a tax code, say for the Rogers bill or something like that. But we'll put it out there and be like, this is your risk from each one of these. This is how much money you're leaving on the table from not having receipts, those kind of things.
So are you making a
Uh,
specific HST code called HST
Yep.
no receipt?
Exactly.
Okay.
Yeah. But we only do that if we have a proven track record. Say like we have
Yeah.
yeah, 3 Adobe invoices showing HST charge. It's the same every month. Okay, we'll take the HST.
Yeah.
But we'll identify to you that there's a risk here, there's a gap. And if you get reviewed, an unreasonable auditor could deny it, right? A reasonable auditor would just be like, yeah, that's fine. The products and services and the bundling of them, I know that's being used by some people in QBO. I don't like doing that with regards to inventory items, but for service items, I don't mind. Recurring invoices, bills, journal entries, very, very helpful. Periodic review. I think this is something that, you know, clients need to do, but I think they kind of need to be sat down and have their hand held to do it properly. Otherwise, they're just going to look at it and be like, it's fine. And it might not. It's probably not fine. We talked about assigning customer names to job costing, get some, or to jobs to get, or to expenses to get a basic job costing. And there's a lot more we can do with management reporting, and setting up those recurring management reports can be very helpful. I'm sorry, are people hearing James? Okay, good. All right, good microphone. All right, poll question 2. We made it, and it's 102. Sorry, I didn't make it by 1 p.m. So what are you going to do with your books? Focus on presenting cost of sales above the line. Focus on budgeting. Assign customer names to their specific costs. Review my detailed income statement, or nothing. Absolutely subjective. There is no correct answer. I can't answer. Oh, can I? Oh, I can.
I don't see that it's popped up to answer yet.
Oh,
No, some people are answering. Look on your different screens, and Kim.
It already
Oh, yeah, you're right. Sorry.
It's okay.
looking left when you need to look right.
I have 3 screens thanks to Tanya from last year. And I still do that. I'll be looking at a screen over here waiting for something and go, okay, it's not even working, whatever, I'm gonna leave. Oh, there it is. I do it all the time.
All right. So we're gonna do a countdown. 5, 4, 3, 2, 1, and pull and share results.
Understanding margin, number 1 answer. Okay, excellent. Yeah, I think that's vital. Reviewing the detailed income statement can really contribute to that. And a lot of people focusing on budgeting. Yeah, that's awesome. That's awesome. I think the real thing that I was hoping people would have as a takeaway from this was to spend some time looking at your own numbers, understanding your own numbers, and how you can improve things. So
Well, one thing that I've done is we're keeping Zoom because I do like Zoom and I do use it a lot because there's so much that I do, but I'm cutting back where I can. So we've changed some internal apps, some whatever, to go anything that is that has been US dollars. Nope, I'm no longer putting up with that conversion. I'm finding it. So like my Microsoft 365, I had that through Rackspace, and Rackspace is provided excellent service, well better than Microsoft directly. So it's well been worth it. However, when I look at it, the difference between that and paying in Canadian dollars, I'm paying a premium, a premium price plus the 40% difference, you know, versus here. So that's one thing. That's the first thing that I'm looking at is what can I cut to bring into Canadian that is going to give me the same value first off. And we've already done that quite a bit. We've gone from, Client Hub over to Financial Sense. Again, my Microsoft, I'm changing that. So now it's GoDaddy. So I'm still not having to talk to Microsoft, getting the good service, and I'm saving a lot of money that way. So that's one of the ways that I've been doing.
Yeah, that's something we did in March, was looking for opportunities to move to Canadian companies over US companies when possible.
Yeah.
Part of that was politically driven, obviously, but
Me
also
too.
too, we did find some savings. Like for instance, our fees from cutting out a couple of payment platforms more than pay for the payment platform for Pluto, which we're now using, right? So
Yeah.
yeah, cool. Um, I'm sure everybody's heard this quote before. Can't manage what you don't measure. Peter
We live
Drucker. So
that.
thanks, everybody. Did anyone have anything they wanted to share about their experiences or things that they want to try or things along those lines? I'm just going to put everything up on the screen. Any questions, comments? Was this a little rudimentary? I'm seeing some heads shaking no. Okay, good. I'm seeing Kim saying,
Generally speaking, we do this kind of thing, but the reality is it never hurts to go back and have a check to make sure everything's lined up correctly.
that's really where this came from, was the volume of stuff we're seeing come in where it's like, well, it's fine for reporting and tax purposes, but it doesn't give great insight to the business owner, right? So I think that's, and I mean, I'll be frank, I got some ideas from this group here that I would like to try and figure out how to get better insight into, say, for instance, how profitable customers are within QuickBooks without having to look out at another way.
And to try and get the customer to focus on their numbers, not just, hey, I need it for tax.
Yeah. Yeah. Forward-looking businesses are the ones that are going to succeed in times of economic uncertainty, even if it is tough to plan.
I like that it is a strong reminder of how important the balance sheet is, because I feel like there's some people that don't really grasp how important it is. Even some so-called young bookkeepers don't seem to grasp it.
My particular favorite, we see it every year, usually by a DIY, occasionally from a bookkeeper. F-150 on the balance sheet, not
Yeah.
owned by the corp. It's just like, can't do that, guys. Can't do that.
Yeah, we inherited a few of those.
Yeah. All right. Well, thanks everybody. And yeah, Tanya, we'll sort out, I guess, a July webinar. We'll figure it out.
Yeah. Well,
We're not doing June?
no, you weren't here yet. We're not doing
Jeez.
June because we will be at Jonathan and Sandra and myself will be at Toronto,
Okay.
QuickBooks Connect, and then also Accountex for some people is that day as well too, and Accountex online. So
Accountex is the 18th of June.
oh,
because
that's the 18th. Okay, I knew there was something on that. Yeah. Okay, Kim, you had
the
your hand.
last Thursday of June is the first day of Get Connected Toronto.